Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's keep going with our gold market analysis. So today, as usual, we have prepared a report. So in general, based on information that we've gotten this week and the Fed minutes that we've got, we do not see any, really surprises, and we could say that the overall medium-term vision that we have mostly is developing well. So currently we do not see any surprises, everything is going as we have suggested. So as we said, within the nearest few months, gold remains under pressure, at least if all other things remain equal. I mean, we will not get some drastic turns and twists in the geopolitical background. Well, in this case, we suggest that gold remains under pressure just because of a few moments. And first of all, it's rising interest rates in the United States and more demand for interest-bearing assets such as the United States Treasury's dividend stocks. And the first moment, then of course the rising rates support the dollar. Second is capital flows support the United States economy that coming from the Europe. This process stands underway. We think that approximately 30% of suggested amount already has moved to United States, approximately 300-400 billion euros or dollars. So we think that it should be around 1 trillion more to come. And here we're mostly keep the same long-term trading plan. This past weeks also is just has confirmed that everything behaves as we have suggested. So just to remind you that our medium-term forecast suggests that gold should remain under pressure within the maybe from 3 to 6 months probably, somewhere to the late summer. It's just because first signs of the sanctions that have been imposed for economy should appear within the couple of months. So already we see some signs already, but it's just some part of it. So for April, for May data, we should get more signs how it impacts the economy. Then we are coming to the summer. Summer is seasonally it's most quiet period for a gold market and just vacation times, guys. And once summer is starting to coming to an end, we're turning to the new event, which is November elections in the United States. That will be a really hot period. And we suggest that right by this moment, the problems in the United States economy should come on the surface and should become evident. That's why, although we suggest the accelerating of the interest rate hike by the Fed, and it might reach 2.75% by the end of this year. We're skeptically on a suggestion is currently is a common opinion that Fed intends to rise rate for a couple of years by the early 2024. We think that the problems in the United States economy come much earlier, and we will not be surprised if Fed start easing policy as soon as in the spring of 2023. We think that the United States economy just can't hold the burden of the rising interest rates, and once the rate will hit 2.5, 2.75, 3% maybe, it will be already really too heavy to carry. So that's our long-term view on the gold. Meantime, in the shorter term, this was very quiet weeks, most quiet probably for a really long time, as market was standing for 2 weeks in flat action. And only by the Friday we see some decision making that gold is choosing the direction. Currently it's difficult to say how stable this decision, but at least from the technical point of view, this is bullish performance. We have the bullish trends on all time frames, starting from monthly down to the intraday charts. In all time frames, trend stands bullish. And market is breaking the tight consolidation that we were considering on the last week. At the same time, here we see some tricky moment. It's just because if you take a look at the interest rate performance, it is also rising. So why the gold shows the bullish performance. It might be either the harbinger of some big geopolitical events, maybe based on some inside information or something, who have more knowledge about the current geopolitical situation. People expect something and starting buying the gold. Because it's difficult to explain this by another reason. At the same time, usually in the period of the escalation and rising of geopolitical tensions, there's more demand for safe haven assets such as the treasury bonds. But here on the treasuries, we see performance to the upside as well. So on last day, previous week, market has jumped from the 265 to the 270, which is just shows outstanding performance. And in general, you could see that performance of the interest rates definitely bullish, which should keep making pressure on the gold. So this is most tricky moment, because cross-market analysis suggests that gold should not rise in the current period, because dollar is rising and interest rates rising simultaneously, which is definitely the bearish factors for the gold. But gold, nevertheless, is climbing. And that could explain only by the moment that something probably should happen in the nearest time, because other explanation is very difficult to find. Anyway, wherever stand on a cross-market analysis, and although it makes decision-making really tricky, we just can't go against the technicals, and considering bearish patterns, bearish setups when you have the bullish context. This is just not reasonable. So that's why I think that carefully we could try to consider maybe some bullish setups that might be formed on the next week. For instance, as you can see on the daily chart, market has turned bullish. I mean, the trend has turned bullish. It suggests that probably we should and could count at least on some deeper retracement. Maybe it will not become the continuation of this trend, but at least some deeper pullback here might happen. And in general, you can see that market is turning up and moving and shifting trend to the bullish. It suggests that on a higher time frame, this market was able to stay above the major confluence. It stands upon this level and now is choosing the direction. So this is in general bullish sign. On the 4-hour time frame chart, the consolidation that we already start thinking that maybe is bearish dynamic pressure is starting appearing here. Market finally has broken it up. With the divergence that we still have in place, it seems that the area around 1965, 1972, it seems that's the most probable destination point to the upside, because here we could get some kind of the ABCD type of action, and it's also strong confidence. So we intend to use this area as the nearest potential target. It means that on the hourly chart, since market hasn't created new top yet, so we can see this top is still below that, it means that we could use for trading only this swing up. We can't build the fib levels from these lows to this one, because this one is below this one. So from the point of view of this recent swing, it seems that we could consider some pullbacks. Maybe it's already has happened, by the way, on Friday to the 1940s. You can see 30% pullback. But here it seems that 1935 is more or less acceptable area, using it to hide the stops when we will consider taking the long position. And let's see what will happen on Monday. If market will form some kind of the ABCD retracement here on some consolidation in shape of the pennant, it probably might be used for taking the position with the initial stop somewhere below the confluence, and then we will see what will happen. Because currently with this performance and all trends on the bullish side, and market, by the way, you can see raised the bearish pattern. So initially we were considering, if you remember, this ABCD pattern here, but the moving above this area, this ABCD pattern is raised already. So it also suggests existing of some bullish sentiment here. And from that standpoint, personally, guys, I do not want to consider taking the short position by far. So that's what we have currently on the gold market.